today, even if you are like super rich, you are going to bargain. People are more picky, and even if you have the means, I want like value for money.
I'm seeing across markets that pricing has become more than just a revenue lever. It's actually a demand signal.
Just keep pricing up and pricing up. You do reach a point where you fatigue even a luxury guest because they see the prices have gone up, but where's the extra value?
Very famous hotel uses AI and they doubled their rates. I don't think we're at the stage yet where an STR can fully rely on AI.
These are cycles and it takes 5 years. These are long cycles to recover. You can't just say, oh, we it up, sorry, and then we recover.
You are listening to STR Global Unlocked, brought to you by AJL Atelier, the show where I speak with the leaders shaping short-term rentals worldwide. I am Simon Lehmann, and after 2 decades buying, selling, advising, and investing, I've built a network that spans continents and categories. This podcast brings that network to you. Real conversations, global insight, no PR fluff. Let's get started. All right, so before we dive in a quick note for our audience, the episode is supported by a small group of partners such as Avivo, Breezeway, Price Labs, and Pickle Insurance, all of whom sit at critical points of the professional short-term rental industry. Today's episode is a special one, a luxury-focused roundtable with founders and CEO who operate at the sharp end of high-end short-term rentals globally. This is not a marketing conversation. This is about pressure, positioning, power, and control in luxury hospitality. Let me introduce the panel to you. Joining us today, Maxime Fries, founder and CEO of Emerald Stay, Stephanie Chai, founder and CEO of the Luxe Nomad, currently in Singapore, Max Aniort, co-founder and CEO of Le Collectionist, and last but not least, Scott Wiseman, CEO at Nocturne Luxury Villas out of the United States. 4 leaders, 4 different operating models, 1 shared reality. Luxury is getting harder to run, not easier. Steph and gentlemen, welcome to the show.
Thank you.
Okay, first I want to talk about the macro reality. Let's start big. Luxury has historically been seen as an insulated form of from downturns, right? But the world feels different right now. So we have geopolitical instability, which I alluded to, rising interest rates, cautious capital, and more scrutiny on travel and second homes. The question I want to start with, from where you sit, is luxury short-term rental actually resilient, or are we simply late in seeing the impact? Who wants to take that first?
Happy to, yeah. Thank you, Simon, for having us. In my perspective for local exchange, it was kind of the opposite. Like, I think that we were hit by the crisis a bit before everyone else. In 22-23, we started to see people pushing back their rentals like from one year to another. A pragmatic example was like someone coming to Verbier every year had like an increase in inflation rate for like his house, like in London. And it was like a huge amount. Like, and the talk I had with him was like, I'm rich, but like right now, like the money I had for this Verbier rental, like just went away. And for, I guess like in 23, we had this impact from the financial crisis, from the different wars that the other luxury groups, for instance, my husband is working at Kering, had like a year. And in the meantime, I think there was some kind of like what we call the lipstick effect, like people going to easy luxury, like maybe like bags or whatever, but that are like less expensive because they still have the money to be able like to buy these kind of products. And I think we were it before. So for me, luxury short-term rental is maybe more like ahead. Like for instance, car purchases is normally what you take as an example rather than after the crisis. So that's what we have seen with local exchange, but I'm very happy to, super curious to see, was it like the same thing for you or was it different?
Scott, you want to go next? It's an interesting aspect that Max is bringing up here.
Yeah, I mean, definitely agree to some degree. I feel that what we saw was kind of an instant pause, but it didn't go below the baseline of the luxury travel and what was happening. Even if we go back if you want to talk about what's happening in the world, in the US, we saw tariff conversations back in the beginning of last year, and there was a definite impact to our business. But it didn't last forever, and it still came back last year, and it didn't dip us below prior year performance. We were still a little bit above, but we lost momentum that went into the new year, and we saw it start to come back a little bit later. So it wasn't a long-term thing, but it was definitely immediate. It happened right away. There was a quick pause, and then it went on.
So your key customer, Scott, is basically US based, right? That's your core of your guests that travel with Nocturne, right? And for Max of the Collectionist, it would be obviously based more European, French, but also US travelers as well. You serve both, right?
Yeah. So our first country of origination for guests is also the US. US travelers coming to Europe. We have more and more, maybe thanks also to politics, and then UK and then France.
Okay. Stephanie, Southeast Asia, is that coming a little bit later, or how is that comparing with what Max and Scott has alluded to?
Well, I mean, we're actually North Asia and Southeast Asia. So we're predominantly Japan, Hokkaido. And then in Southeast Asia, it's Thailand and Bali. So I think for us, what you see is it's the ski customer versus the beach. And when you're dealing with ski customers or clients, you know, they have a lot more disposable income. Although, like Scott, it's much cheaper to ski in Japan than it is in the US, as the Americans are now discovering. So when I look at my, like Niseko, etc., very resilient. However, this season, we've seen the 4-star or non-ski and ski out dip and MB pick up. We're still above last year, but we picked up much later, like last minute bookings. So there's definitely a lot of concern, I think, from everyone in the world, right? Like I think even LVMH said in FT last week, they can't really give guidance this year because it's just so unpredictable.
That's a good one. We'll keep that for our next board meetings. We just refuse to give guidance and say, hey, it's too hard right now. We've seen these times before, right? We've seen that through COVID-19 and SARS and many other challenges that we had, that sometimes it's very difficult to make any good predictions. That leads me to the next question that I want to go a little bit deeper, however. Also considering luxury rental, we've seen very solid results, you know, in the past few years. Let's say the luxury segment of STR has performed exceptionally well, especially during COVID, but even post that, the vertical awareness has helped for people to rent versus luxury hotels as well. But now, as the market sort of plateaus out a little bit and gets a bit more challenging, what would you see as breaking first right now when you think about the luxury rental piece? Is it demand? Is it margins? Or is it operational tolerance towards our guests? Max from Emerald, would you like to pick that one?
That's a far, it's a far more difficult question than they had. I feel,
Yeah.
I feel it's unfair. Sorry. Just before I start answering this one, I'd just like to echo on what was said before, if you allow me to. Overarching, I would still say overarching resilience. Obviously, so let's get the message. I mean, at least from what we're seeing, we see a resilient market, especially in the very high end. Indeed, depending on markets, for example, in Europe as well, we depend much more on the UK market, for example, as a feeding market. And there, indeed, when you had these like fiscal pressures last year, then suddenly you have, for a very short time, as Scott said, you have a disappearing demand or something. So you can really feel when people are hit hardest in their wallets, then there is an impact. But I also feel a bit like with the war, let's say in Ukraine, that's unfortunately still ongoing. But I mean, it's almost like being now normalized and accepted. And people like, okay, well, now we have this to deal with. We have the war, we have tariffs. We've kind of accepted that's the world we live in. And then you feel immediately then the demand comes back. So this for me tells me that there is still an underpinning, very resilient demand.
Yeah.
Because else you wouldn't have these, you would basically fall. And same with the stock market, you would see like the stock market falls, but then it kind of, there is so much demand for it, keeps coming back up. So anyway, that's my short contribution to the first question. And to this question, I mean, right now, honestly, so if I rephrase it, it's what breaks, what will give? Does the market still have legs, or will demand give, will margins give? Again, here for me, like overarchingly, I think we're still in resilient demand. I think it really depends if you have to look at micro. As Stephanie said, we have some markets where the bigger properties struggle much more now, where For years before, if I take the ski market, for example, in Europe, you could have big chalets in many destinations. Now, certain destinations are lower, struggle much more. And those who struggle faster are the bigger ones, the bigger gross booking value chalets. But if you go to the prime resorts, there, if you're in the right location with the right assets, then you will not struggle. So I think it's a matter of really looking at micro, like in micro markets. What assets are you talking about? What kind of demand? And I think these assets and these prime destinations make this market resilient, at least from our perspective. I'll stop here, but I'm happy how, I don't know if I answered the question correctly.
Absolutely.
What else are going to say?
It's definitely an interesting angle that you're taking. Max, does that resonate for you as a collectionist as well? Or is that a different behavior because of different type of guests and customers that you serve?
Yeah, I think so. I've been growing like every year. So, and we still have like a 15% growth rate this year, but we have like less bookings than 2024 in 2025. So I guess we do see that the luxury market is resilient, but also like rich people richer than the year before. And but I do agree with Matt, and we're operating in the same destinations. We know each other quite well. That for super high-end properties, it's more like before. For instance, I'm taking the example of Verbier, where we both operate. We had this in our segment. It's called like haute montagne properties, and it was like fully staffed. You had like the chef, the driver, the butler. Like you have like 5 to 12 people within the chalet with you. And today, even if you are like super rich, if you do not need all these people, or if you do not want all the services, you are going to bargain. You are going to just enlist what you don't need. When before there was some kind of full service that's what people were looking for, just to be sure that everything is settled and everything is covered. When now, like I think people are more picky, and even if you have the means, you're just like, oh, I want like value for money. So it can be big money, but I want big value for the money. So maybe that's the difference I see from, and I guess it's also something that we saw with like more US travelers. They're not more demanding, but I think they are more used to a higher level of service. And to be honest, like it pushed the service up also in Europe.
Interesting.
Yeah. Well, I guess in your properties in Southeast Asia, like Bali or Thailand, that has less of an impact, since obviously I would say that the manpower cost impact on a rental is less than unpicking certain services for guests that you have, Steph.
Yeah, but the bookings in Thailand and Bali, I mean, Samui's done well because of the White Lotus, but in Phuket, the super high-end chalets have had less bookings. So one of our partners there, New Year's Eve, he had 2 high-end villas that weren't booked, which was very unusual. And it came in like the day before Christmas. So I think definitely, to echo what both Maxes have said, people, even if they have money, are a little bit wary of spending too much.
Would you support that argument, Scott? Do you see similar behaviors of your markets?
Yes, it is a little bit similar. I mean, I definitely agree with what was said earlier, that it's a resilient demand for sure. People are still spending. That's not really the issue. I still see the value of experiences over goods still seems to be a durable trend. And so people want to travel. Peak weeks remain very strong. I would say there's more of like a quick adjustment, but then it continues. They kind of just reposition. So maybe a shorter stay, maybe booking more last minute because they're not sure, but the spend's still there. The expectation's still there. We heard that. That hasn't changed one bit, whether demand's up or down. The expectation continues to be very high on, which is a good thing for us, by the way, for keeping us a mainstream product compared to resorts and hotels. That's good that they expect it as long as we deliver. So that helps.
Max from Le Collectionist gave us a great segue to a topic about pricing. One thing, when we look at mainstream vacation rental, short-term rental across the board, and they think luxury doesn't need to do pricing, it just happens, right? I think, and you said before, we have less bookings, but we still grow, which means that's also looking at higher end properties, also rates. So one thing I'm seeing across markets is that pricing has become more than just a revenue lever. It's actually a demand signal, as you just pointed out. And we have seen reports from companies like PriceWise, for example, that are increasingly used to read early shifts in traveler that things are changing, also for pricing. And my question about that is, how much are you relying on pricing data today as an intelligence and not just as a yield optimization to work against or with some of the trends that you have alluded to? So it's not about gut feeling, obviously. Luxury rental has less comp sets, without a doubt, but still pricing is going to be even more important as the market is becoming slightly softer or more challenging by the guests and everything else.
Yeah. So I do think that with a luxury customer, what we see is it's not whether or not they can afford it. They think like, is it correctly priced? And that's kind of the way that we look at it. I think we saw it here in the US, particularly the damage that can happen when everyone just follows suit and you just keep pricing up and pricing up. Destinations get on board. You do reach a point where you fatigued even a luxury guest because they see the prices have gone up, but where's the extra value? And so now I think you can get caught in that same trap. So we don't try and correlate pricing because what we can get just because. We still know that we have to deliver and be able to do it. So we do look at it from a trending point of view to some degree, but we also feel that we can control our own demand a little bit if it's priced correctly. And so looking at not just what other people are charging, but also what the search behavior looks like, what's happening within the lift to the different destinations that we have. There's a lot of indicators. The dynamic pricing tools that are out today are huge helps to be able to pick up on that, but we try and expand that and look a little bit deeper to be able to understand what's really happening, everything from the psyche and the marketplace and just within the trends before we even get to the pricing.
You nodded already, so you have your opinion on here.
No, but I completely agree with Scott, and I guess it's really a question of like, one more time, like value for money. And we do see that the super high-end part is less price sensitive, but still we do have a polarization also of the booking. So we have a lot of people booking far in advance. For instance, we have a lot of bookings for next year, like 2027. And these people are just like, that can be like super big bookings, like above 100K a week. And it's just like these people, the best for 100K, they want the best property that can be like in Verbier or Saint-Tropez. Or it can be like very last minute because like it's more the uncertainty of the world. But I think people are looking more and more at pricing. Of course, like they're maybe a bit less sensitive, but we do categorize our properties depending on pricing. And we're far more, we put more effort on like the affordable luxury segment of our category of properties to be sure that we have a price match if they are listed on other platforms.
Yeah.
So it's something that is super important to us.
Yeah, I can imagine. Stephanie, what about for you pricing? I mean, that's an interesting point that Max alluded to in terms of, while you probably, most of your supply is exclusive supply, right? So you don't have this comparability, right? Or all of your supply is exclusive supply.
Yeah. I mean, but I have to look at my competitors, my comp set. So we have a weekly revenue meeting, but I'm dealing with like Bali, where a 4-bedroom villa can be, I don't know, $500 a night or $600, and it's considered a nice one. And then I've got Japan, where my chalet can be $15,000 a night. So it's a range because this is Asia. It's a bit different from Europe in that respect. I was in the Seco recently, and the GM of a luxury hotel, I won't say his name, call me, but that very famous hotel uses AI, and they doubled their rates this winter, and they've still got bookings. I don't think we're at the stage yet where an STR can fully rely on AI just because it's so different, the nature of our business. But yeah, I think we don't have access to that data that I think hotels generally have and can probably make better decisions on for rates. It's still a bit of gut feel, at least on our side.
Yeah, I think I'll echo what the others. I mean, for us, we rely heavily on pricing analytics for the kind of 4-star segments. So let's say up to 15,000 a week. That's where we see really enormous help. And we have a centralized revenue management team. And here we really apply, like our team used to work for hotels, and for hotel groups. So we really apply the same techniques that are used for hotels. And traditionally speaking, when we were looking at the higher end, it was a bit more gut feeling. And indeed, like, taking last year's price grid and then increasing or whatever, or seeing what the others are doing. But increasingly, we're also kind of using, so there is less data for the higher end, okay? Because obviously it's a smaller pie, smaller part of the market. So you can't apply the same techniques, but you can still have some safety checks. There has happened this in the past where, some destinations, as Scott said, sometimes people get like crazy and everybody's like increasing prices and, let's just do 20, 30%. And then especially post-COVID, it was crazy. I mean, post-COVID, you had some markets where you had like 50% increases in 2 years. And at some point, someone had to say, hey, let's stay pragmatic here, and at some point, people are going to say it's enough, But the issue is you also depend on the environment. If restaurants, if everybody's doing the same thing, yacht rentals, jet companies, it's the entire ecosystem, I think. And I think we need to be at destination level very aware also. And sometimes our job is also to kind of voice as well to the communities, into destinations themselves, saying, hey, be careful here, because you have seen it can take one big shift away and say, people saying, hey, this destination now is, it happened with Corsica, for example, at some point, where people saying, hey, this is now completely uncompetitive if you compare it to other destinations. And then the destination as a whole shifts, and then you can't, then even if you're priced well within that market, then you're losing out. So anyway, I don't know if that's...
No, I love that point, because I was just thinking, where else did I see that? And it's a great example that you're bringing out, Mox. And the mainstream STR, it's Croatia, hands down. They just priced themselves out of what the customer who went to Croatia was, like the driving customer from Austria and Germany. And they just took it and took it and took it and took it. And the damage that this can cause over time is significant. If you're there in the luxury space, I could imagine something very similar can happen as well, especially when now the more integrated resorts are coming, like Vail, who also come to to Europe now. And then all of a sudden you lose control over a certain, or control you don't have regardless, but they become more powerful within the destination, and that can affect the rest of the independent short-term rental industry at the same time.
Exactly, and these are cycles, and it takes 5 years. These are long cycles to recover. You can't just say, "Oh, we sorry for the, and then we recover. It's long cycles. And we're seeing right now, we have a heat map of destinations where we're like, hey, let's be careful, where we're less, we're less keen to add inventory there, because in our view, they're kind of in a little bubble. And if you compare it internationally, then we have to be careful. Anyway.
So I want to be devil's advocate. And by the way, Max, there is a thing called beep, so we can do that when we reproduce the podcast. So it's not a problem. Which you would be the first one. I want to take this to the next level. We talked about pricing and revenue, but ultimately I could argue with the points that especially Scott and Max from the Collectionist has made, is that for me, looking at the STR, at the luxury level of STR, it's a margin conversation. Isn't the margin more important? As we're saying, like, labor costs are becoming more expensive, operation costs are becoming more expensive, distribution is becoming more expensive, the technology stack is becoming more expensive. And yes, you price your properties and your inventory against a different comp set, but ultimately, isn't the margin that you're managing on a unit basis going to be more important in the future than just revenue in itself?
Margin matters. I mean, of course, that's what we want to bring in, but if you hyper focus on margin, you're going to actually miss the things that get you the margin, which is taking care of your homeowners, right? If you are providing better service than anyone else in your marketplace, you're going to get a fair commission, your fair take rate that helps, right? You're starting there with your margin is how much you're getting on the rental of the home that you're working with the owner. So being committed to the owner and justifying why you would be paid more than a non-luxury provider to take care of the home starts with your margin right at the top. And then it's the culture of how you set up your business as a hospitality business versus a rental business so that the guest gets something you need. Quite honestly, if you have to run it like a business, and margin matters. But if you're focusing on the quality, the service delivery, what you deliver to the owner, it's fine. If you mess up, by the time you realize that margin's a problem, it's usually too late because you put yourself in a spiral. So it sounds weird, but the best way to focus on margin is to not focus on margin and make sure the things that build to that are being taken care of.
Would you guys agree with Scott or another viewpoint on margin?
I agree. I think, like, for us, we look at how do we create an amazing experience for the guests, right? And then we've seen our gross bookings jump, our repeat customers jump as well. I think if you get too into the details, like I need this % margin, or it's 0.5 off, you totally miss the whole hospitality story. But of course, you can't overspend. So I think Scott's right. You run it like a business, but first it's about the customer and then the owner.
I think we're a bit more, so depending on the different categories of properties, we have a different layer of services also. And for instance, for the very high-end part, we do have to be sure that the margins cover the full service aspect of it. So, and it's super expensive. And especially like Maxime said, if you are missing some very like super expensive bookings during the peak weeks, then you have also like hired all these people. We hire like about like 200 people for winter and for summer. And you have to hire them like far before having all the bookings in. So no, we do drive the margin like very closely. And something we did not a long time ago is also to explain the margin to both our customers. So the owner also to explain that finding this kind of guests is also super expensive, more and more expensive to find to reach to that audience. And so we expect like this kind of commission rate, but like the rest of it is also like for a more affordable luxury segment, the level of service is not that far. People are less demanding or have, I don't know, less expectations. And so we can reduce the commission rate because they are price sensitive. It's also, I think, a conversation with the guests. What do you expect? Am I going to price what you need? I'm not going to overprice. But if you are like 100K a week and you want full service, then we can do it. And that explains the, I don't know, 10% commission rate for concierge, for instance. So I'm not saying like this is the right way to do it because we just started. Also, like we can have this conversation in a year. But I guess the mood right now, it's more to be the more transparent we can and to explain where we bring value and what do we feel like this value cost at the end for us and for the customers.
I'll second that if you allow me to jump in. Yeah, on the one hand, I think Scott and Steph are right. Like in the high end, you really have like people value you have to be generous with the service, customize, and these things you cannot. We lean into that conversation thinking about your margins. Like, if you want to really have a customized approach. So that's on one hand. But then on the other end, when we look at the bottom line and analytics, and then you see indeed that we have too many, for example, staffed properties, and now we have to like rethink our operational model in order to have less fixed costs, to be much more versatile and adapt much more also to market conditions. Then this is where the margin conversation comes in. And you just can't do things the same way as 10 years ago or 15 years ago. So I think here it's really on a case-by-case basis. I mean, do I think that margins will expand for operators? I don't think so. I think we're inherently in a low margin bit. Like if you look at across the scope businesses, tech, whatever, we are in a low margin business. It is what it is, right? I mean, you can have you're going to have maybe exceptional, like some outliers where a property on one given year, whatever. But on average, I think we're in an industry where you're really relying, there are so many cost layers, you have to be conscious. But also, for example, I'll give you another example. Like we had an executive committee a few months ago and someone raised his hand and say, oh, I have an idea, to diminish costs. We can remove commissions, like third-party commissions, and try to stop working with agents and do more direct. I mean, obviously that's and
everyone's dream.
Yeah, exactly. But here, basically, you can't. You rely on an ecosystem, and here you have to be a bit smarter, perhaps, and think of partnership approaches or ways to indeed educate the customer or the owner better. Same thing for maintenance as well. Like who covers maintenance charges? When you have exclusive agreements, there's always a discussion as to who charges. I mean, which maintenance charges do you back charge to the owner, or is the operator who takes? And I think here it's increasingly important, indeed, as Max said, to educate both the customers and the homeowners that we are faced with inflation as well. And basically, if they want to continuously have great service, like if the four of our companies go out of business, then eventually homeowners and guests will suffer as well. So we have to be sustainable, and everybody at some point has to chip in and make efforts.
Yeah, great point. And that leads me to a lot of different thinking as well. And by the way, you might get some additional competition, because what I have seen in my experience from the margins and the business model standpoint is that definitely the upper end of the market, the luxury market, has still better margins than the mainstream STR business that is under massive pressure. And we've seen at the recent DARM conference in Florida that the mid-market, especially in the US, has just fallen out incredibly. And this means that, people strive for more luxury rental properties as well. So, it's not going to get easier, but you still have potentially more sustainable and better margins because you have more leeway in terms of pricing what you can deal with, but you also have more operational risks, which you both obviously have alluded to. So let's move on to the conversation about guests and our clients. That's a big conversation across the entire STR world as well. Who owns the client? Like, who actually owns the relationship to the guest? And, as the OTAs are becoming more and more powerful, especially in the mainstream STR business like Booking, VRBO, Expedia, Airbnb, in the luxury rental segment, it's still quite different. Steph has already alluded to, repeat customers and everything else. But it's a big question at the end, especially because you have a bit of a different ecosystem, which you, Maxime, from Emerald Stay has already alluded to. The agencies get rid of the middle layer, and then the Collectionist also redistributes chalets on a non-exclusive basis as well, so that's a bit of a mix in terms of business models. So not all of the inventory is entirely managed end to end on an exclusive basis. So therefore, the ownership of the guest becomes a very big topic. And then probably, Scott, you also use third-party distributors like, I don't know, like a Homes and Villas by Marriott Bonvoy. They would say, that's my customer, that's not yours. So, is it the brand? Is it the operator? Is it the OTA? Or is it all of the above? Who wants to talk about that?
I'll give that a go. For me, it's an easy thing to win if you can make it clear. It's whoever is the most reliable in that guest experience or in that guest life wins that battle. If you, so you don't have to assume just because a distribution channel delivers the guest that necessarily they own the guest. The experience is you and what's happening in front. They're relying on who's going to understand me, understand what I want, deliver on it, use data to be able to act on it. And when something goes wrong, who's going to fix it? The distributors are going to call you, right? So the less intermediaries between you and the guests and how you take care of them when they're there, you can own every guest, so to speak, because you're the one that's going to impact their vacation, right? Their vacation includes the booking process and all that other stuff, but it's what happens when it's on the ground. That's in our hand. It's an enviable position to be in and one that we want to do, because that's how, if we mess it up, by the way, we won't own anybody. But my point is, it's ours to lose, and we should own the guest because we control the experience.
Would everybody agree with Scott here? It's an interesting point. I could also see how you would disagree, because I had an experience when I was running Interhome at the time, which is obviously not the same in terms of a value proposition. But we did a survey with of all our guests, and 70 to 75% of our guests at the time, it's a long time ago, but still did not remember who they stayed with. Right.
Yeah.
So they might remember who they booked with, but they don't remember who they stayed with, who actually delivered exactly what you talk about. And I would agree with you, Scott, that in the luxury space that might be different, because there's a different perception who actually provides the service at the end. But, I could argue that most of the guests, regardless if it's luxury or mainstream STR, they do not remember ultimately who they stayed with.
Vas-y, Maxime, pardon.
Non, vas-y, toi.
So we have, I guess we're on a learning curve to be completely transparent, because we were super direct until we did the acquisition of Rumbleski in Switzerland, where they had like a 60% of their business coming from travel agents. So we had to learn how to work with travel agents. The way we see it, it's still like it's their key asset to be able to grow a business. And at the end, for us, in a way they own the guest, because even if the guest is coming back like directly to us without like going through the travel agent, we'll pay them a commission for 2 years. So it's a very like simple rule, and we do respect that the guest is their key asset. Regarding platforms, to be honest, like I agree with you, Simon. Like for instance, when we're talking with different tech platforms that can help us like distribute the different properties, we'll do it only for our exclusive properties, because otherwise we don't really see the point of making marketing for other people. But after, it's more, we have a duty on like maximizing the revenues and the bookings for the owner. So at the end, if we work with other platforms to be able to do that, then this is the promise that we do to our owners, especially if they sign exclusively with us. So for instance, we have like less than 20% of our properties that are exclusive, but they do represent 50% of the revenues. So we do push these properties like in different ways. So at the end, I think it's super, and we have 40% of our bookings coming from former guests. So I don't have a clear answer. I'm very sorry about that. I feel it's a bit like blurry, but I think it's a joint work. Like at the end, working well with travel agents, it should be clear that they are booking through Embark, but they are staying in local exchange, Nocturne, whatever, like probably, and that it's a teamwork. And I think it's the best way to do it. And even like when you're looking at listing platforms like Airbnb, now it's super transparent that local Collectionist is the agency behind this property. So I guess it's just becoming more and more transparent. And at the end, no one owns the guest. The guest owns himself. And we're just trying to be respectful of like who is working. And to be honest, like the travel agent brings a lot of value. So it's normal also to have a commission, like what Maxime said. So I guess it's just to see who is bringing what value. But I think the guest is smart, so he knows it pretty well. And so that's my 2 cents.
I love that point. Very valid. At the end, we own ourselves, right? So nobody owns us, thank God. But still, it's an interesting analysis. And thank you for your transparency, Max, in that it's a bit blurry, right? And Stephanie, the Luxe Nomad is focusing very much on execution, repeat rates and everything. Would you say it's a little bit blurry for you too? You work with intermediaries as well who own the relation or have better relationship with potential guests than what you have directly. How do you see that?
I mean, it's a bit different in Asia. Our labor is much cheaper than Europe, and I think we have a lot less red tape. I think also the ski market, you guys take on a lot of the concierge costs as well, which we don't. I think we own the guests once they check in when it comes from an agent. You know what Max said, you have to work really closely with the agents as well to make sure they have a great experience. But yeah, our core value is go above and beyond. And when we took over a company in Japan a few years ago, and we changed it from money first, customer second to customer first, money second. And, our ratings went from like 3 point. Yeah, it worked. It used to be if your heating wasn't working, well, here's a small portable. Now we're like, here's a bottle of wine. What else can we do? So we've got good reviews. We've seen repeat turn up. But, I have a different structure to Europe where it is so much more expensive to get people to serve your guests. Bali is a few $100s a month for someone to work full time. So
is there anything to add, Maxime, from your viewpoint to that?
Yeah, I mean, basically, we used to also say, like, we were in the fortunate position that at the end of the day, the guest stays in a property that we control, technically speaking. We can put any branding in there. We can, if we're doing a good job, if people are trained well, each human touch point can be a reminder of who the operator is, etc. But at the end of the day, it's still hard. And I think we have to recognize as well, especially in the very high end, people book through, like, still rely heavily on niche travel agencies that you wouldn't even hear of. They're just niche travel agencies that work with maybe 15 very high net worth individuals and book all their travel, for the past 15 years. Then what do you want to do? Like, it's better to form a partnership with them rather than saying, hey, he's staying in our property. I mean, at the end of the day, it's also a question I filled in your questionnaire, Simon, of saying, are people actually that loyal to you or to a property or to a destination itself? People, it's something maybe we're going to talk about later, about how loyal people are and where the loyalty sits. And I think here, if we start, what you keep saying, our teams, if we start thinking they're our customers, then probably we're on the way of losing them, So let's keep this attitude of saying, hey, stretch ourselves. Yes, they're staying on our property. I think, Scott, you're right that they're ours to lose. So if we're doing a good job, we can win them over. But let's keep in mind this ecosystem we're in. And I think partnering with other people is key as well. So again, maybe not a very useful answer, because at the end of the day, it's like yes or no, yes and no. But it's a complex thing. I think it's very complex. And we have 25% repeats booking rates, depending also on if you look at micro, and it varies as well. And assume that because you have 25% there, they'll have it here as well. So very, very clear.
Yeah, loyalty is a totally different, like an additional kettle of fish in this conversation as well. And it definitely is extremely important. But as long as, and I would love to dive a little bit deeper on that, but, to be perfectly honest, looking at the fragmentation of the entire marketplace, building loyalty even within the STR luxury space is going to be very challenging. And I've seen that over and over, where the conversation is still about trust. And you all confirm that the agency who a family office books with for years, they trust them first, and then they need to give them the right experiences. And if they want to go to Marbella tomorrow, they will potentially not ask you, hey, do you know a place in Marbella where we can stay? Maybe they do, but ultimately they ask their travel agents or where they booked to make that happen. So I think that's a nuance that will continue. And we have seen different, plays like a Homes and Villas by Marriott Bonvoy, for example, or a Haven, HVN, who is trying to build a broader network to bring these massive luxury rental supplies together, to create these more loyal to the vertical. But I also think that a lot of guests, and this is my opinion, and maybe you see that differently, and please shout out, but I think the clientele you're serving, they're also not entirely consistent using STR. They also use luxury hotels, they use yachts, they use other means of travel and hospitality. So, that's where loyalty becomes even more challenging for them, because maybe in a city they rather prefer a 5-star hotel than renting something versus leisure destinations or whatever. I would like to cover the conversation on trust and risk and responsibility a little bit further. I mean, it's needless to say, we had a very tragic event in the Swiss Alps on the 1st of January in Grand Montana, which has been around the world. And for everybody, it's been super tragic for everybody that was affected by it, but also travel and destination at large. And yes, it happened in a bar, but it also can happen in a rental. And that's something that we've been scrutinized by hotel industry for a long time, that our health and safety and our risk profile is actually could be there as well. There has been a recent fire of a luxury chalet in Verbier as well, just very recently. So this is definitely a topic that,
and a hotel in Courchevel,
and
also.
a hotel in Courchevel as well,
right?
which I saw yesterday as well. Absolutely. So how do we deal with that? Does higher scrutiny and insurance pressure actually help professionalize luxury even more, or does it quietly raise the barrier to enter so that only a few players ultimately survive, because this pressure can become significant? Or do you see that is not going to be material?
Yeah, I think from my perspective, regulations with the right intention, and not just safety and security, but also caring for the environment where we serve and how we put that together. There's a partnership, and us as professional companies help ensure that those regulations that they want to have adhered to, that we could do it in a professional manager way, but also ensure they're being done. So if the intent is to continue to operate, but pay attention to all these important things, we're all for it. It makes a big difference. And I've been in the hospitality field a long, long time. And even when you look in the States with, private and government situations, if you're sending tourists to an area where people could fall into a volcano or get hit by a hot water geyser and things like that, having professional operators that handle their guests in a way, they make it easier on those government regulations to be able to do it, because they're taking responsibility to make sure that no one goes too close to something they're not supposed to. So I think it's a really important partnership that is dependent on each other to do it. So I don't find it as a barrier to entry unless that is the intent of the local government. I see it as, look, we need to professionalize this, just like there's tons of rules and things that went in around hotels when they first started having problems. I think it's a good thing. I think it professionalizes us. It moves us as not just a side business. This is a real mainstream way to travel, and so we should act and behave and follow those things to make it safer and build in that level of comfort and responsibility. So I'm all for it with the right intent and taking ownership and helping deliver.
Be very hard to argue. Is there anybody who wants to argue that, Scott, for taking that flag? Before we run out of time, I would love to jump into operations, because operations is still the backbone, no matter if you do luxury, mainstream, STR. One thing I want to jump in is, because this is where luxury often breaks, it's also about operations as well. I mean, you're not excluded from that conversation. Housekeeping, maintenance, inspections, staff turnover, none of this scales gracefully, and it's a challenge. And I would love to, so the question to that is, what's the most expensive operational mistakes luxury operators still underestimate? And one of the questions, the reason that question is also a little bit related to cases like Bacasa, where, in terms of the success or more less of the success of Bacasa was more linked directly to operational efficiencies, for example, as well, where unit density was an issue, not enough properties in one location to run it effectively. But when you look at that in luxury, what is the most expensive operational mistake that luxury operators still underestimate? And a couple of points you've already raised, like staffing, especially for fully catered properties, is a challenge because Max from Collectionist already said that you need to staff your properties before all the bookings are in. So you need to have an enormous amount of flexibility when it comes to that. But is there anything else that you could think of that is a very expensive operational mistakes in the luxury space?
Like, I think being cheap, and it's something that
Being
Stephanie
cheap.
just, yeah, it's something that Stephanie just said. It's like when you have an issue or when a guest is not happy, just like doing something that would be like half good, it's just losing money. Go for it. Like, take the responsibility and just like serve your guest well. But same thing, like I guess, for instance, we just capped from like maybe 2 years ago now, but we capped like the commission rate that concierge can do on something, because like at the end, the guest was feeling that we're like trying to get his money from like something, I don't know, like a scooter in Paris, like
a
something
vending
that was
machine.
yeah, we're not making any money out of it. But if like it's double the price that he sees in the street, it feels like, oh, they're just getting my money for nothing. So for me, it's more like, one more time, like which value do you bring and what kind of money it represents. But like the biggest operational issues, I think it's just being cheap, like the number of people you need on the ground, the gift that you will make, how to like solve an issue, the gift you will make because you messed up. Sorry, I didn't say the F word like Maxime. So for me, at the end, it costs you the guest, and this kind of guest is super expensive to acquire. It's super expensive to make them come back. So I would say like being cheap.
Yeah, I love that. Steph, do you have anything to add to that?
I think you spoke about density, and I agree. This business model works well when you have scale. So if you go into a new destination, you have like 5 or 7 villas, it can be very difficult, right? Because you have a very small amount. So I would say that is a key challenge we found in the past, new destinations with small inventory. Especially, I mean, I've just come back from Japan and I was checking the breakfast because our breakfasts are not up to par. So I don't think it's impossible to have great service. It has to really come from the top, and then you see a change through the organization, and you just have to keep improving it. So I'm back in 2 weeks and making a shirt called Little Miss Breakfast.
So before we wrap this up, I would like to finish with a sort of a last question in terms of scale. And then I want to throw that at Scott and Maxime from Emerald, massive growth ambitions and scale is something we talk about. I think, we have also 2 of you are private equity or investor backed, heavily investor backed as well. So can scale also start to erode luxury? And I think from the pure full service end to end will account point of view, I think, Scott, you run the largest business here. And that's definitely something that is on top of your mind. Think about, how can we scale but not erode luxury?
Yeah, it's definitely an everyday mantra. And it's related to a lot of the things that we talked about, right? I mean, it goes to how we approach it. And for us, it's not the number of homes that defines scale for us. It's the making sure that they fit within us being disciplined as a luxury provider, and then the value of the home and us helping those homeowners get more out of it. So being brave and disciplined to get rid of homes that don't fit quite the model, even though they're giving you some money. So if you grow without purpose or without thought of where things are going just to be large, you can't do the hard things like get everyone on the same platform and have less seasonal labor so that you have more consistency on the delivery. And we talked about distribution. Losing control over distribution also helps or will result in not scaling thoughtfully either, and can be confusing to the guests. But I'm more excited about it than I am worried about it. I think I've seen it in other industries, right? We've seen all-inclusive luxury in the islands in Europe, where that was owned by individual families and brands, and now every big box hotel company is part of luxury all-inclusives. And they got to scale, those companies built up because they did it thoughtfully and meaningfully. So I think this as the sector matures, it really opens the doors for people to be leaders, setting standards and creating enduring brand versus just growing for the sake of growing. So we're very fortunate to have an amazing capital partner that sees the value of building a meaningful brand versus just trying to get to a number at the end of it. So I think with care and caution and the right ways, I think it's an opportunity more than anything else.
Maxime,
Yeah, I think
you guys are expanding quite considerably as well. Would you agree with
it's
Scott? Anything to add?
exactly. I mean, when he says brand, and I would add also the infrastructure. So because our conversation so far is really centered more on what we consider unit economics, so property level. But actually, if you really want to scale the brand and the platform, you have to also invest a lot on the hidden aspects, on the infrastructure, anything, training, culture, technology, all the processes are basically, and we inherit them from the hospitality world, so all these processes basically are time consuming and are costly, but you can't do without them. And basically you can grow, I think, by adding units here and there and without investing in your stack. But at some point things are going to break. And when they start breaking, it's too late to then go back and invest in the infrastructure. So here we've been so far fortunate indeed to have also capital partners that support our strategy. And we look at we look at our unit economics, but we also look at the platform we're building. And I think it's a combination of indeed, again, brand, culture, training, HR, technology, digital. And I think this obviously should be at the service ultimately to the properties, to the guests and owners. But again, you cannot do without. And I think, look, I mean, you have many luxury hotel groups that have quite a bit of scale, and are successful in delivering still a really superior experience locally. So I think it's possible, and I think it's a great challenge because indeed I believe that no one really did it so far. I mean, you have regional players, or you haven't really so far. You don't have a Four Seasons or an Aman, of VR, and I think there will be one eventually. I think, and we should all, and I hope there will be many. I mean, I think that maybe we should. Hopefully, we are the four of us. Will become the Amans of VR, but I think it's super exciting because the market as a whole keeps growing. And regulation and everything makes the barriers to entry higher, and hopefully, if we're doing a good job, we can keep our moat and continue to grow while delivering this superior experience.
Excellent. Now that leads us straight into the last conversation quickly on hotels. So who's learning faster, hotels or STR? And, is the convergence really happening? Do you think that hotels will leave that space? I mean, we've seen different operators like Accor, who's tried with One Fine Stay. We've seen others who have dipped their toes into the STR world as well. I mean, there's plenty of examples. Do you think that hotels will leave that space entirely up to you? Or do you see changes happening already where this can become a competition where hotels adapt faster because of access to capital versus STRs?
Happy to take this one. We had several discussions with hotels that Maxime named, where they were discussing with us how to run a private property. And at the end, I think it's really a question of mindset. If you do rent a property within a Four Seasons resort or Aman resort, you cannot do a barbecue because there's a property just next to it, and the other guest is not going to be happy for you just to grill some sausages with your friends and to have I don't know, a beer party, whatever, to put some music. And when people do rent properties in our companies, in our portfolios, I guess it's really you do own this property for some time. You can welcome guests. It's super different. So for me, at the end, one more time, it's just different options. People are looking for different things. And when they rent properties within hotels, I guess they're just looking for something more private, for the biggest room within the hotel. When they do rent with us, and I think I don't want to speak for you, but I guess it's kind of the same philosophy. They're looking for something a bit different, more family style that will be more close to a secondary home. So I don't see it like a threat. I don't see hotels like a threat for many years. I'm going to hotels. I love hotels.
Yeah.
And it's just depending on the group, if we're all 10, we don't go to hotels. But if we're just the two of us with my husband, we go to hotels. For me, it doesn't change anything.
I think it'll be complementary, right? I don't think it's used to be either STR or hotels, but I think now I'll book a short-term rental, one trip, then I'm going to stay in the hotel. So it's actually quite complementary. I think it's just difficult for hotels to start it from nothing because it's very entrepreneurial,
Yeah.
right? And then secondly, it's a very different market of travel agents and distribution.
Yeah.
So I've seen some hoteliers try to do it and they're like, wow, this is much harder than selling one hotel room. So I think you can combine, but it's unlikely organically a hotel is going to grow it from the ground up.
It's definitely a situation where everyone can coexist. I think that they think because they're all under one complex that it should be easier for them to be able to do it, which is why they kind of do. But I agree. And I think what Max talked about, there are a lot of rules and restrictions in how you can operate, and kind of having, to me, I look at it this way: we can do everything that any great resort can do, except in full privacy. And so, for us, I think that's an edge. But I do think what luxury hotels and brands did is they kind of gave this mental benchmark of what it's supposed to be like. And then we now can take that and apply that to short-term rental, where they're like, this whole house is mine. It's a real opportunity for us to kind of move it into the next level.
I kind of agree. And if you look at, for example, to name what the ones I named before, like Four Seasons or Raman, usually when you have like a hotel and then service villas around them, more often than not, actually the villa owners, they're not really super satisfied by the, like, basically you can tell that the hotels, they really double down on their service, on their rooms, on their hospitality, because they have the networks with the agencies, they have the trainings is geared towards hotels, and villas or chalets or apartments are this odd duck that really, like, they want, because they don't want to miss out on the market, but at the end of the day, they also don't really want to get as deep in the process and in the operations as we are willing. Maybe we're just crazier or more resilient, or no, I think it's definitely something to do with entrepreneurship as well, Steph, as you said. So I'm not too concerned either. I think we have to stay on our toes, but I see more room for partnerships as well. I think there are hotels that are in you can see, for example, in St. Bart's. I know, Scott, you have a big business in St. Bart's, and who has the biggest market share there, if I'm correct, or at least one of the biggest, it's Eden Rock, right? Because they have the Eden Rock Hotel, and then they have their villas around them. And then basically they're mutually, and you could replicate a similar structure elsewhere, like where, hotels partner with villa rental companies, and it's mutually beneficial, because I think some guests indeed, like to have access to Eden Rock's private beach. Obviously everybody wants that. So you can trade, and then you can do that as a bargain for others. But I think you can, in many destinations, you can do that, provide access to private clubs, to gyms, to whatever, to the wellness areas if the house doesn't have them. So I think it's more an angle of partnerships.
Obviously the upper hand with hotels is standardization, right? So what are your thoughts on standardizing bedding or linen across, your properties? It's something we're thinking about, but it's a pain to replace every mattress.
Yeah, it's a pain. Do you guys do that, Scott? Do you guys standardize things like these, or is it just each villa has its own?
It is. Some things are standardized. We want people to recognize that they're in a Nocturne, experience, even though we still keep the brands, the local brand names or the forward brands, but we do think there's a certain level from the amenities, but in different places around the world, you can't source the same stuff. So as long as it's the same quality, delivered the same way, there is some flexibility there. We don't want to, I think that's an advantage to ours, is to get a better sense of place than what hotels can do, which are big on the standardization because of the scale. So I think it's somewhere between, Stephanie, quite honestly, where things that someone wouldn't go into one and see that you have a granny style comforter on the bed with lots of flowers or something. And so I think there's some things that can be different, but still give the same impression of what type of property they're sending.
Okay, so let's move on to the final question of our episode today, talking about hotels versus luxury short-term rental. It's needless to say that we've seen several hotel companies looking into this space. There is Mandarin Oriental, there was Accor Group with One Fine Stay, there is obviously Marriott with Homes and Villas by Marriott Bonvoy. How is that going to affect the luxury rental short-term business? And is it the hotels who are going to get faster on top of this business, or is the luxury rental space already well taken control of by operators like you, and it's going to be more challenging for hotels to adapt to this space?
Yeah,
who would like to take this one?
Yeah, I'll jump in. I think there's a place for both. Among us, we were even talking like we enjoy hotels and resorts, and they're not going away. I think it's just about what we can do that is different. I think the biggest thing is maybe let's not try and be them, even though they offer maybe some type of rental that's associated with a resort. Should be ourselves, not trying to replicate them, because we think we have a lot of distinct advantages compared to what they offer. A little bit less restricted within, being in one property and having to still be mindful of other guests and things that are happening, where I think we've got a lot more flexibility to deliver something that's truly unique without worrying about treating everyone the same, but treating everyone differently and still being allowed to do that. I think it's a great advantage that we can do literally everything and more than some resorts can do, but all in the privacy of their own accommodation. So it's important that the mental view of a luxury hotel is what people bring to what they expect in the short-term rental space. So we deliver on that, but do it our way and show the value of being able to do that. Lastly, I'll just say too, we don't sell on value that often. It's kind of implied on the luxury space. But the truth is, the amount of people that a home can sleep comfortably in luxury and private bathrooms versus trying to buy multiple resort rooms is usually less of a cost with a better experience, even though that's not on any of our marketing material or ads right up front. It's a better value and they get a better experience.
I totally agree with you, and I think we don't see that going into a different direction. To be perfectly honest, because ultimately it's so different. It's more about how can you leverage the customer at the end of the day with your own product, right? And is there an opportunity to do so? As we said, your guests are normally more hybrid in terms of what they consume when it comes to hospitality products. So I don't see that as an ultimate thread. So before we wrap this up, I have prepared a quick rapid fire for you. So there's 5 questions that I would like to have your opinion as short as possible, if possible, in one word. And basically we'll start with Max at the Collectionist, and then Stephanie, then Scott, then Max from Emerald. So always the same round, so we can make that as quickly as possible. So let's start. Growth or profitability?
Right now, profitability.
Steph?
Profitability.
Scott?
Both?
Both, I would say as well. Or growth, if I have to pick one.
Control or distribution?
Control.
It depends on the destination, to be honest.
Control.
OTA partner or necessary evil?
No. I'm friends with everyone.
Yeah, same. OTA partner.
Yeah. Every relationship should be a partnership.
Yeah.
Partner.
AI, advantage or distraction?
No, it's super advantage, just how to use it. It's a tool. It's not a purpose.
Advantage.
Advantage.
Advantage eventually. Right now has to be managed without
We're
distraction.
using
Eventually.
an AI bot for concierge though, and it's helped a lot.
Hotels, competitor or collaborator?
Friends, collaborators, one more time, there's room for everyone.
Sometimes a frenemy in some destinations, but I like to say at hotels and some trips.
Yeah. I like the word frenemy.
Yeah.
Yeah.
I think in our destination, mostly friends, I would say. I can see where it could also be frenemy in some of Scott's situations.
Interesting. And final one word for the future of luxury short-term rental.
Experience.
I'd say growth. More and more people are embracing it.
Winning.
Human.
Love it. I can see a clear difference between luxury operators and property managers from the mainstream business. You guys are sitting on the fence on many different things. You try to be happy and friends with everyone, so that's great. That clearly distincts what you serve in terms of who your stakeholders are on the supply side and on the demand side as well. So it's interesting that property managers in the mainstream, for them, a rapid question is easier for them to be more direct. They probably hurt less people. So I would like to thank Stephanie from Singapore, Max from Paris, Scott from the United States, and Maxime from beautiful Andorra for joining STR Global Unlocked today, talking about the luxury vacation rental space. Still a lot of challenges, but it's a mainstream business that has grown. I think the 4 of you have a lot of conversations to have together as well to talk about an international industry that continues to grow and gets a lot of attention. With that said, I wish you a wonderful time and looking forward to seeing you all again soon.
Thank you, Simon.
All right, thank you, Simon.
Thank you.
That was STR Global Unlocked, where we say what others won't. If you got value from today's episode, send it to someone who is still playing it safe. Follow the show and get more global insight at ajlatelier.com. The globally recognized STR consultancy I founded and that proudly brings to you this show. More bold conversations are on the way, so stay tuned.